Okay, my beautiful friends, sit back and relax because we need to talk. It is Tuesday, October 18, 2022. If you just happen to, I'm laughing. Look over at stock futures this morning. We're talking higher across the board here. There's a lot behind this. And there's a lot of speculation as to whether or not this market is bottoming out. I'm going to go out on a limb here and tell you that I don't think it's over. As a matter of fact, that was what Morgan Stanley said just yesterday. It's not over. Why am I saying that? Well, look, I'm not a perma bear. I'm not a perma bull. I just look at the data, try to take in what's going on here, and come up with the most likely outcome. That's it. It's very, very simple. So, look, a lot of people right now, and look, I look at the comments, I go into chat rooms, my own chat room on my website, traderschoice.net, and some of you seem to believe that this is it, the market is bottoming out. In order for that to happen, all right, a couple of things have to take place, okay? Number freaking one, and I mean number freaking one, bar none, period, the end, is this debt market issue. It has to stabilize, okay? Is it over? Are bond yields going to stop rising? Or let me put another perspective on that for you. Is the bond market, the global bond market sell-off, going to miraculously stop here? It won't, unless there is intervention by central banks. You understand? So without that, forget about the stock market bottoming out. Okay, if in fact central banks do get in here, look, this whole thing with the Bank of England, quantitative easing, and then they double it, then they're stopping it now, but now they're going to be using one of their facilities, their repo facilities to kind of fake liquidity in the market, like every central bank is doing right now. If in fact, let's say, for example, the Federal Reserve, who is also involved in this back and forth movement between cash and institutions, this repo program, if they increase that, and they will, okay, and other central banks do the same, well, yeah, that would push off the inevitable. But it's not going to stop the issue here, which is underlying liquidity is drying up. Now, it's not just Greg Mannarino anymore. It's not just me or you, concerned about this and talking about it. This is getting mainstream attention freaking everywhere. So, even Janet Yellen is talking about it. We're concerned. We're concerned about it. Look, that's the issue. The second piece. So, the biggest part of this is the debt market. The debt market must stabilize. Okay. The second part is, also connected here to the debt market. And I'm talking about the currency free fall. Central banks, okay, they're in a race to the bottom with regard to their currencies. Period. The end. Now, if central banks don't stabilize their currencies, none more so than the Federal Reserve, and we're watching this dollar phenomenon, which all of you knew was going to happen. We talked about it right here over a year ago. We were going to see this phenomenon with the dollar. It was going to get stronger relative to other currencies. I mean, what a call that was, right? I didn't pull that out of a hat either, but it's just so easy to see in my view, and I don't think that's over either. So if central banks don't get a handle on their currencies, and they won't. Central banks are determined to continue to pressure their currencies. They're determined to continue to inflate, to inflate the money supply. Look, not one single central bank right now, anywhere in a developed nation, is being told to increase their capital reserves, which would actually slow down inflation, which would shrink the money supply, okay? Nobody. And the Federal Reserve, forget about it, okay? No congressperson is going to even bring this up. Could you imagine? Let's just set a scenario here. Let's just say one of our loving, caring Congress people who had even the slightest clue about the financial system were to be, on camera saying, hey, you know what? If central banks, if the Federal Reserve really wanted to stop inflation, they would contract the money supply, which is a very simple thing for them to do because they have a tool to do it. They have tools in their toolbox, and they can do it by forcing the banks or telling the banks to increase their capital reserve requirements higher than zero. But you won't hear that. Okay, either number one, they have no clue. I'm talking about our brain dead politicians. They're all brain dead. Okay, and they're all puppets. They're all in some kind of theater act. Central banks running the show, you all know that. Okay, but that's besides the point. So, is the market bottoming right now? Well, I really don't think so. And unless those two things happen, how many of you, okay, comment here, how many of you out here who are watching this video blog right now believe, number one, the global bond sell-off is over? All right. Are bond yields about to stabilize? Well, maybe. If central banks get in here and fake liquidity via their repo facilities or by some other action, quantitative easing, I don't know, something along those lines. Then number two, do you believe central banks are going to stabilize their currency, or are they going to continue to pressure them, cause inflation to rise, and destroy an entire class of people around the entire world? I'm referring to the middle class. Okay. That to me is the most likely scenario. Central banks are not done inflating by a long shot here. They are not going to contract the money supply. None of them are. They're going to continue to come up with schemes here to keep it propped up for a while because they're not done. But what's the cost? What is the cost, people? You know this already. If you look, I would consider you, if you follow this blog, if you have been with me for 6 months on a steady basis, I would consider you an expert on the financial markets. I would listen to you before I would listen to a single person who works over at Goldman Sachs or JP Morgan, Morgan Stanley, believe me, because you understand how this really works. But I want to hear from you. How many of you believe that we're going to see these kinds of actions, a stabilization in the bond market and a currency stabilization as well? I don't think so. I really don't think so. As a matter of fact, I did an interview with small cap stocks yesterday. The interview just came out. I will place a link to that in the description of this video. When you're done here, check out that interview. I think I shocked my interviewer several times, Kerry, nice woman, with what came out of my mouth. And but it's all true. It's all true. And I think you're all going to get something out of it. So anyway, like I was saying, I was writing some stuff. Look what I wrote here at the bottom. I want you to see this. I've been telling people this lately. We need a freaking revolution. We need a freaking revolution, man, against central banks. I'm not talking about a government overthrow, although the central banks are the government here. But unless we get rid of these perverted organizations, public enemy number one, we're dead. Some of you dead in the literal sense. Anyway, stock futures higher across the board this morning. Okay, why is that going on? You got the 10-year yield just under 4%. You got a dollar with a fractional loss on a relative basis. That was the last time I looked at it. Could possibly have changed by now. Okay, market participants here are hoping for some kind of action from central banks. Hope is not a strategy. I think most of you know that already. But that's what the market's hoping for. Some kind of quantitative easing, some kind of stabilization here in the debt market, some kind of currency stabilization here. Is it going to happen? Well, I guess that remains to be seen, but there's going to be a price to pay. You can't fix this. This cannot be fixed because this is all massively inflationary. All it's going to do is expand the debt. I wrote this article yesterday. I told all of you about it. I wanted you to have a copy of it, about this new expansionary debt cycle that we're going into here. People, you can expect several things to happen. Another crisis, a big one. Several of them, as a matter of fact. Whatever needs to be done to continue to allow central banks to inflate. And this is going to be sold to you by the President of the United States, by Piglosi, by whoever else. They're going to get some politician to tell you and sell you some abstract idea, like, for example, spending hundreds of billions of dollars is going to reduce inflation. This was the Inflation Reduction Act. They sold that to the American people with no outcry at all. You and I laughed at it from day one. You cannot spend your way out of inflation. Period. The end. You can't spend your way out of a crisis either. And we are in a full-blown crisis. We're in a debt crisis. We're in a currency crisis. And it's not going to stop in my view. That's why I don't believe the bottom is in with this market. Unless, of course, like I said, okay? Central banks stabilize the debt market and central banks stabilize their currency. Do you think that's going to happen? Do you think that's going to happen anytime soon? We'll see. We'll see on that deal anyway. So what else do we have going on here? This is pretty much all the stuff I wanted to talk about this morning. How about this one here? Bank of America is warning. Listen to this one. Warning of unusually high inflation for the next decade. Lovely. You mean it's not transitory or temporary? Duh. Make this stuff up. Okay, anyway. Try to be me for a day and make this stuff up. It's crazy. As I said, stock futures higher. 10-year yield under 4%. Could have changed. I don't know. Dollar slightly lower right now. Crude oil relatively flat last time I looked at it. Bitcoin, again, hovering around 19,000 and a half. Cryptocurrencies relatively flat. They've been in a range for a while. Gold and silver also relatively flat. We need to see where this goes. But again, I want you to answer my question from before, please. All right. I believe in all of you. And I think, like I said, if you've been here for 6 months, you know the market. You know the market big time. Number one, a central bank's going to do something about the sell-off here in global bonds. Okay. Number two, do you think central banks are going to stabilize their currency or are they going to continue to inflate? I want to hear from you. I will read the comments. Again, like I said, new interview. Check this interview out. I really think you might have your mind blown. A lot of you are familiar with what I talked about there, but maybe some of it's new to you, especially if you're new here to this blog. Link in the description of this video. All right. I will see all of you at the end of the day. Please share the video. Love you a lot. And I'm just out of here.